Hello again, this is Alex with MasterChessTrading.com and this is market recap for Friday, February 29, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Alright, so it's been a really wild week with lots of fears about the markets, about the virus, etc. So we're gonna go through as much as we can. Dow Jones and small caps, I think they collapsed into a bear market right this instant. But I have a more tendency to trust S&P 500 and Nasdaq. They have not yet done so. So we're gonna try and see which one is correct, S&P or Dow Jones. Lots of selling, transports collapsed, real estate and utilities, also dropped. So once again, don't try to think that you can hide in utilities and real estate during bear markets. Um, I have some comments that people leave on my YouTube channel, which you're welcome to do, and I want to revisit the stock I analyzed a while back. It's a Russian stock called Mobile Telesystem, and I'll show you that actually it makes very little difference what you're trading, so long as you got my indicators. The world is on the brink, and we'll look at the world uh, ETF VEU. So a lot of scary events, not unfounded fears, and market is reflecting it. Treasuries went to records, and this is reflective of the fearful. Uh, People are having lots of fear. However, junk bonds have not yet uh, gone into a bear market. They were very close. We'll look at them, but not yet. Oil at 52-week lows. We'll look at recent alert, and precious metals also pulled back quite sharply. And finally, I'm just extremely pleased to report that we have a crypto robot trading. It's a demo account, but with real money. It's using real money. It's using my algorithm. It's using the MasterChess trading indicators. And at the end of the presentation, I will show some of the trades and performance that uh, it's been uh, doing for the past couple of months. So we are very close to starting to accept other people's money. So do sign up. I'll show you where to sign up at the end of the presentation. Okay, so let's look at S&P 500. This is S&P 500 futures, as always on a daily chart. We usually trade on daily charts, but some people like to do intraday, and in fact, you can see right there. I'm gonna show you BNB USDT and BTC USDT at the very end of the presentation, and it was traded on hourly charts by a robot. It is not impossible to trade on hourly charts, but it is very difficult for humans. Anyways, so let's get back to S&P 500. This is a daily chart. You can see a breakdown below the red line. So these indicator lines, the green, the blue, the red, and the yellow lines, as I keep saying, they are proprietary indicators that I wrote, and they are available for your use on TradingView.com. All you have to do is just sign up at MasterChess Trading, and I will open the door for you. You can have the same lines on your chart. What do? They provide a very convenient uh, reference points for the trader. So up to very recently, you know, S&P was just going up and up and up. So, for example, the actual alert was back in February, and you can tell it the exact date was February 5th, 2019. So a little bit over a year ago, and obviously a very successful trade. So right now we're seeing the opposite. We're seeing a strong move down and a close below the red line. Now, in my book, this is a caution. It's not yet an outright bear market. Bear market would start if it closed below the yellow line. But even then, I would be very hesitant to start shorting stocks. People keep asking me when we're going to start shorting stocks, and I'm just telling you that it is much more difficult. You get many more false signals. Some people like it for it's just a rush, and also the gains are significant if you know what you're doing. But it is much more difficult. So for now, we are not there yet. We need to see a close below 2839, and then sometimes it just collapses, but occasionally or quite often it rallies back towards the red line. That's when we short. This hasn't happened yet. We need to see a close below 2839. So S&P 500, you can see the shape of the candlesticks is different, but ETF SPY, the shape was different as well. So this yellow sideways arrow here, it just shows where I would be exiting my previous trade and where did I enter, where would have I entered my previous trade. So let us zoom out and take a look. So the previous trade was alerted and I did enter some in some of my accounts was in February of last year. And this is basically you know, for how long we can hold the stocks. It doesn't really matter. It could be a year or 2 years, or it could be one day. So long as the trigger is there, so long as the trailing stop, and I was trailing at the actual blue line, and there it is. There is the exit just recently. So you can see a very nice gain. Yeah, of course you're going to lose some. You cannot get in on the very bottom and get out on the very top. It is impossible. But we can get in significantly close to the bottom and get out significantly close to the top. Plus, you can take profits along the way. So at least you won't get very disappointed when you lose a little bit of money. Trading is all about making more money than losing. You will lose money. It's impossible not to lose money trading. If you're not losing money while you're trading, well, maybe you're not really telling the whole story. Anyways, S&P 500 SPY exit alert recently right there. Um, Caution now. Not yet an exit um, signal. Lots of cautions, some exits. So next I want to show QQQ. Same thing, you can see a close below the blue line. So the previous alert was back in June of last year. Yeah, if you exited at the very top, you're very smart. Congratulations. But it's very difficult to do that. So you will lose some of the money or some of the move. So depending on where your trailing stop is, you will be able to exit, you know, with a decent profits. Now here's the chart that really worries me is this Dow Jones Industrial Average DIA, and you can see a close below the yellow line. This is a bear market. Okay, so this is unequivocally a bearish sign. Um, Now, since like I just showed, the QQQ and the S&P 500 have not yet crossed into the bear market, I would give the bulls the benefit of the doubt. For stocks, I always give a benefit of the doubt to the bulls. Vast majority of the time, the stock market is going up, but occasionally it is not going up, and it is going down, and this is when we want to catch it and write it down. But for now, I want to caution against shorting. You know, we need to make sure that the market has indeed changed into a bear market. I ended up all of my positions, literally every single of my positions were just the or the stops were triggered. So I had to close every single one of my positions. Vast majority at a profit. Some of them were at a loss, but it's just crazy how many positions. I think I closed like 9 positions or 10 positions this week. So overall, it's very significant, obviously, very significant selling, and we should be on the lookout for either a rebound or potentially a significant deterioration further. Just depends on, I guess, world response to the world events. And the events right now are indeed kind of worrisome. So IWM small caps, they have been underperforming. So if S&P was at record highs, this was only 52-week highs, and they were kind of small caps were really dragging their feet. I kept pointing out the narrowing of a trading range. In other words, the yellow and the green lines, just coming together closer versus, for example, here in November, where they were wider apart. And now you can see a close below the yellow. This is, in my book, just means bear market. So we got two uh, major indices, S&P and Nasdaq in the bull market, and we got two other major indices, the Dow Jones and the small caps in the bear market. So let's go ahead and wait. This is one of those situations where I just want to sit around and do nothing again. Transportation. I mean, if you follow and subscribe to the Dow theory, then transports moving lower is really a bad sign because I think the theory goes that demand for transportation is falling. That means that bear market is just around the corner. Now, here's the entry into the bear market for this particular security, IYT transportation average. It happened on 26th of February right there, and then we had a follow through. So right this instant, I have no problem with it bouncing towards the red line, currently at 178. That's where I would be opening a short. Once again, I would be again very cautious because stocks tend to move in lockstep with other stocks. So if for some reason, or rather if or when S&P decides to move higher, the transportation sector will also move higher. I guarantee you that much. The question is, will transportation, top out around the red line, or will it continue higher with the rest of the market? So we will need to look as the picture is developing. But overall, not a very good sign. Transportation in the bear market is a really bad sign. And here are some of the, investors, so to speak, people who are more into kind of buying and holding and saving, etc. So uh, some people say that the defensive sectors, such as real estate, for example, are, they're spared during the bear markets. No, that's not true. Real estate will also get sold, I guarantee you that much. And you can see it right now. You can see a big drop from record highs for real estate, and also a caution basically as well. So no sector will be spared if a true bear market begins. The same goes for utilities, XLU, record highs, sure, but now again in the caution phase below the red line. So we need to be very careful. We need to be cautious. I would be, uh, I mean, if it goes below the yellow line, this is just a really bad sign. All right, so I wanted to switch gears a little bit. I wanted to analyze a a person who, one of the fans, one of the subscribers made a comment. He wanted to analyze the stock MBT Mobile Telesystems. Now, I don't know anything about the stock. I just know that it's an ADR, and I guess it's a Russian stock. So the way I'm looking at this stock, I mean, you can see. I would be just looking at the indicators, and there it is, 24th of October. I would be entering right there, and this would have been, a nice move, 25%, 26% move in your favor. Now, I actually remember because I zoomed out and I'm looking at this stock, and I remember I actually analyzed it a while back in 2018, and back then it was in a bear market. So, I wrote here aggressive short levels, conservative short levels, and notice that it just continued down, 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 down. until eventually there was a breakout. Here's that breakout. This happened in June 2019. So very simple. This is all I do. I look for a breakout of this nature, and then we just ride the trend higher. And then a similar picture again. Right there is another opportunity to get in. 24th of October of 2019. Very nice move higher, as I just showed. So right this instant, look at this. What do you know? It is at the trigger. So if I was trading this security, I would be buying it right this instant. The world is on the brink. So this is VEU, all world except the United States. This is a very broad um, stock ETF. Strong move lower right there on 28th of February. So this candlestick from 28th of February from yesterday, you can see that it was gonna close below the yellow line, but it actually is a couple of cents above it. It's 48.49 right now, the price, and the yellow line was at 48.46. So we're by 3 cents away from a bear market for the world. Um, well, technically we're not yet in a bear market, but you know, this is a kind of thing that I watch basically. So very close to a bear market for the world. Now, I mean, I'm talking to other traders and they're saying that most likely the quantitative easing will begin soon. And here is TLT, the treasuries. A couple of recent alerts, very nice move, 12+% move, and these are indeed new all-time record highs. So let's look at the once again at the yield curve here. Okay, so right now, yesterday from 20th of February, you can see how steep this short-term interest rate is versus the 3 months yield right there. Versus the 2-year yield right there. And just a couple of days, look, I'm gonna go back a couple of days. It was not nearly this steep. In fact, just like a couple of weeks ago, it was normal. This is normal. And now, look how it's almost inverted. So this will need to be acted upon. They need to cut the interest rate to, looks like about 2 basis points. So like to here somewhere. So this is a race to the bottom. Eventually, the interest rates will go negative if this continues, and in Europe it's already negative. So uh, the question remains: does inversion of the yield curve mean anything in the modern environment of quantitative easing? Back in 2007, you can see inverted yield curve where the short-term interest rates are above the long-term. Back in 2008, you can see same kind of inverted look. Does it mean anything? I guess we're about to find out. But for now, we're trading TLT. We're trading TLT on the upside. We were buying it. I have some positions myself, and just enjoying the ride for now. Okay, so the junk bonds. Here are the junk bonds. I keep saying that junk bonds and stocks correlate very highly. So let me zoom out a little bit. You can see the breakout for junk bonds occurred last year around the beginning of February of last year, and I'm put in S&P 500. It occurred about the same time. So junk bonds and stocks broke out about the same time. Now, junk bonds, of course, didn't experience such a huge run as the stocks. However, they still made the 52-week highs right there on the 17th of January of this year. Now, I kept pointing out this narrowing of a trading range. So even as early as December, mid-December, uh, the range between right there. You can see between yellow and green lines were like 7.25 points, 725 basis points, and right now it was only 300. So it literally halved, more than halved. What this means is that we have a narrowing of a trading range, and now the price has very little distance to travel to bearish levels. So this is what happened on Friday. You can see the price dropped below the yellow line but closed above it. So it was the same thing as for the VEU, for the All World ETF. So technically, again, we have not yet closed um, into a bear market. This is a good sign. So hopefully we will just bottom here and continue higher. If we do, then we'll start buying again. It's not a big deal. You know, you can always buy a new position. But if you lose money, then you don't have money to buy the new position. So we exit our positions, we take our profits, we take our small losses, and we move on with our lives. All right, let's switch gears. Here is oil, and bragging a little bit about this oil alert. So this a purple arrow means I didn't personally enter. I wish I entered. Uh, the alert wasn't sent on time, I think. So the next, in the next few weeks to few months, we will begin automating the alerts process, and we'll start launching a new product called Signals. So sign up on on my website at MasterCharts Trading. Um, but if you have my indicators, this is so easy. You just short below the red line for oil right there, and nice 21% right. So congratulations if you opened. Right, let's finish up with uh, precious metals. So precious metals had a very big run. These are multi-year highs for gold, XAU USD. Now we have a relatively sizable pullback, especially on Friday, with almost 3.5% drop. Now, will this mean that this is it? This is the end of the bull run for gold? I wouldn't say yet. No, I want to wait and see. There's plenty of upside left, and I want to see at least a bottoming pattern around 1530, and then perhaps a rally higher. Now, silver, on the other hand, just had a huge drop, doubled the gold, 6.2%, enormous candle. Um, Unfortunately, I was actually trading silver, so I ended up with a small loss. So I had to exit and just forget about it, move on with my life basically. But the point of the matter is that sometimes silver and gold and in any case many symbols they just move a lot. So we need to be very nimble. All right, so I wanted to show an update of what we've been working here at MasterCharts Trading. And it is with just with incredible pride that I show you this chart. This is a return on investment percent. We started uh, the robot. This is a trading by the robot, and this is how many percent it made, on daily basis. So from inception back in uh, December of last year here, the robot made as much as 17%. And what was it doing? It was trading 5 different cryptocurrencies on an crypto exchange called Binance, and it was doing so on hourly charts without any input from us humans. So this is a algorithmic trading, and we are expanding this, and we're going to continue to transition to other uh, exchanges, for example, to Kraken. So I wanted to show that this is one of those things that I've been just waiting for many years, and it finally happened. You can see that I started my blog back in January of 2014, and finally now this is coming, you know, to fruition, and I'm seeing an actual robot trading, and I am just incredibly happy. So this is very promising. So far we got about 50 trades in, 50 trades on hourly chart. So you can see that there was a lot of fluctuations here. Biggest drawdown was back in January. It's about 4.5 to 5%, uh, and as high it went as high as 17.5%. So in 2 months we made about 15%, and if we extrapolate this to yearly, this would translate into a significant amount. So what I wanted to do today is I wanted to show a couple of trades perhaps, and what is it doing, what's the robot doing. So here's an actual trade that is actually still open. Um, Now notice that this is an hourly chart where I'm hovering, it's 1H, and this is BNB USDT. So it's a Binance coin, Tether US, traded on the Binance on hourly charts, traded by a robot. The robot is doing the same thing as you're used to seeing with my lines, with the green, blue, red, and yellow lines. It's the same thing. In this case, the robot has determined that uh, the security is in a downtrend and opened the position right there on the 23rd of February, around 1700, so 5 p.m. right there. Afterwards, the price just collapsed in our favor and it's down 22%. So this is good thing because we shorted it here. And it's the same thing. We're waiting for. We took profits. We took lots of profits already, so we have about 40%, 50% of the position still remaining, and we're going to basically close the rest of it when it closes above the red line. But overall, this was done without the human interference. This is the cool part. On hourly charts, are you actually going to be doing this in the middle of the night, looking at the chart, making a decision? No. So what this is doing on your behalf is a robot is trading on our behalf and making those decisions. Since the algorithm was relatively simple, we were able to program it in. You can see there's only 4 lines, so there's not that it's not a very complex algorithm. So the simplicity of the algorithm is also what makes it a very easy system to trade and to implement. So this is what's happening right now. One of the recent trades, BNB USDT. Congratulations to the robot. Another recent trade is Bitcoin versus US dollar. Again on Binance. There's the opening of the position, 23rd of February at 5 p.m. And then it just collapsed another 13%, and it's still open. We're still short this position. I mean, we took profits, so it's obviously going to be profitable. But overall, it's just one of those things that are beautiful, easy, and sometimes you get moves of this magnitude. And this is the reason why we're having such decent return, is because sometimes we catch such big moves. So without further ado, go to masterchartstrading.com, click on sign up. Sign up for one of the services. I'll show you which ones. But if you're interested in algorithmic trading, there's the interest list. Just sign your email here, and you can be put on the mailing list. Now, I also obviously offer the other services, so alerts, which are going to be transitioning into a new system, into a new product called Signals. So for now, alerts are still at a ridiculously low price of $24.95 per month, or if you sign up for yearly, it's $20 basically. Um, this will be most likely transitioned and folded into a different type of product where things will be more automated, but much more readable and much more understandable. So most likely there will be a signals product, and the price would be higher than 49.95. So I urge you to sign up right now before the prices went up. If you are ready to trade on your own and you just want the trading indicators, and I'm talking about these indicators, you can have them on your chart. All you have to do is sign up at MasterChess Trading right there, and I will open the door for you on TradingView. All right, that's it for this week's recap. Once again, if you have any questions, please ask me. If you're ready to sign up, go ahead and sign up. And if you're not yet ready, then sign up for our interest list, which is forming as we speak. All right, that's it for this week's recap. Thanks for watching. Have another great trading week. Bye bye.